Are you looking for a business that can make you a millionaire? If yes, then this video is for you. I'm going to tell you about one business that could make you a millionaire in the next few years. If you want to become rich and successful, you'll need to find a business with the potential for rapid growth. Rapid growth businesses are those that can scale quickly. They're also known as high growth businesses or hyper growth businesses. These businesses can increase their revenue by 20% or more over a period of 3 years. Real estate wholesaling is one such business that could make you a millionaire if you work hard and have a passion for it. Real estate wholesaling has been a popular business for some time, with many investors seeing it as a golden goose that lays eggs of gold. But is it really that profitable? Watch the video till the end to learn more about this interesting business opportunity and how it could help you achieve your goal of becoming a millionaire. What exactly is wholesale real estate? To wholesale real estate, you have to find assets that are possessed by people who are eager to sell. Most of the time, these are apartments that either need to be fixed or whose owners haven't paid their mortgages. As a wholesaler, your goal is to locate a property owner ready to sell for less and make a deal with them to purchase their house. The next step is searching for people who might want to purchase the home. The objective is to sell the agreement to a new buyer at a greater price than the seller would accept. It's a great method of earning money, usually $5,000 to $10,000 or even more, without putting any of your funds up. The pros of real estate wholesaling. There are many good things about real estate wholesaling. You can learn how to start investing in real estate. People think wholesaling is a wonderful way for prospective investors to get into the real estate business without putting up any cash. There is no requirement to put money into it. Saving up for a cash payout and getting a loan can be the most challenging parts of investing in real estate. You are not required to pay a down payment or monthly repayments when you wholesale real estate. There's no need to look at the credit score. People who wish to invest in real estate but have credit problems can find it hard to do so. You don't have to check your credit score is one of the best things about wholesaling real estate. How to get rich quickly in real estate wholesaling. As a real estate investor, the fastest way to make money is real estate wholesaling. When you found a property investment that costs less than its market price, you can sell it quickly and generate a profit. The wholesaling process might take a few days to a couple of months, making it a quick method of earning cash. How to wholesale real estate in 7 simple steps. Real estate wholesaling isn't hard to do. It requires a little hustle and a desire to accomplish the work needed. Like speaking to property owners to locate assets for wholesale. Let's go over each step to demonstrate how it's done. Number 1, look for properties to buy. Find eager vendors first. Real estate brokers could be able to assist, but you should speak to the owners directly. Try Craigslist, FSBO, and Homes by Owner. They all have owner-sold listings, or you can hire a property finder to save time. They may check online, travel for empty residences, or simply knock on doors. Bird dogs refer to these finders. They work on spec, so they're not compensated unless you make money. Before making a payment plan, consider your country's rules. There are other options for finding properties, like sending mail and postcards using email lists, joining meetings and events, or you can use bandit signs to find motivated vendors. Some choices demand more advertising. Bandit signs may cost only a few extra bucks, reducing your income, so choose a few budget-friendly approaches and determine what fits. Number 2, call the owner. You can't wholesale a home before submitting an offer, so call folks. Landowners may be hesitant to hire a wholesaler. They're not previously heard of this unusual way to sell a home. Motivated people need little sales techniques. You must understand the seller's situation. They may fail on their mortgage, for example. You could say that selling to you will avoid it and benefit them financially. Contacting sellers isn't meant to urge them to take action. Less than 1 in 10 is determined. 2 possibilities exist for portraying yourself. Inform the owner you're a wholesaler. Tell them you plan to locate another purchaser and transfer the agreement to them to generate a profit. Secondly, sign an agreement without disclosing wholesale. Many wholesalers consider the client a partner. This is lawful but unclear. You can locate real estate agreements online and adjust them to your requirements or have a local lawyer do it. Number 3, property valuation. Purchasing a property below market price requires knowing the market price. First, find out if the seller is eager. If they say their property is worth $200,000 and demand $200,000, they're not interested, so don't waste your time. If the seller's lowest offer is $20,000 or below market price, you are on to this one. Now you need to find out other homes in good shape, previously sold during the last 3 months. When you find at least 3 recent sales that meet this criterion, you can estimate the price of your home after renovations. An agent can provide this data. Zillow.com is another option. But develop your own comparisons. Don't depend on their Zestimate, which is frequently inaccurate. Number 4, evaluating repair costs. Before deciding what and how to offer the owner, consider repair bills. Collect quotations from professionals until you've established restoration cost guidelines. Take a contractor to a home visit to identify repairs. Create a list of everything you've observed and show it to the contractor. Painting, carpeting, cupboards, countertops, gadgets, and everything else that must be repaired or changed. Believe it must be handled when in question. Consider the ceiling and windows. Check the electrical, heating, and sanitary sewers too. You can use a general calculation of repair bills to explain your proposal to the seller. Number 5. Talk about a price and sign an agreement for the property. So it is time to talk about the cost. You'll have to understand how much it will cost to fix the house, and also how much it will sell afterwards. This is the most significant way to come up with a proposal. Determine the 75% of the property's value after repairs. Take off the repair estimate, and take off at least $5,000 for your service charge. The portion you're left with is the highest you can expect to be paid for the residence. Here is a simple example. After repair work, the property is worth $100,000. So you reduce the value by 75%, which is $75,000. Then you deduct the repair cost, that is $15,000, and your revenue, that is $5,000, which brings the price down to $55,000. You can either begin the negotiating process even less than that. However, that's the maximum you can pay and still make what you're worth of time. If the seller agrees, sign an agreement to purchase it and give yourself 1 month to close. Number 6, find a buyer. Now that you possess a house agreement, you can sell it. Find somebody to purchase from your agreement, then finalize with the seller. Your seller deal ends in 30 days, so move immediately because you're searching for cash purchasers. They can deal swiftly since they do not have to be approved for a loan. You can discover cash buyers in various ways. You can contact or email local property buyers if they're keen. Attend regional real estate investor social events to advertise the sale of the property. Post estate brochures, or use Craigslist or Zillow to advertise the property. You can find various strategies to promote the property. The real estate is developing a buyer's list so you can alert as many eligible purchasers as possible in the near future. Number 7. Get the deal done. Discovering a title firm to handle the closure is the last move. You need to locate one who knows what wholesaling is. Not all of them do. The title company can also do a title hunt within a few days. A title search is needed to determine whether the estate has any outstanding debts or other hidden problems. Don't tell your buyers this information until it's finished to save time. When you found a buyer, put them in contact with your title company. They'll handle aligning the sale, getting the money from the buyer, and putting together the settlement statement. Once the purchaser and seller have approved the closing papers, the title company will mark the assignment and you'll get your money. You can either get a check or a bank transfer. That's it for today. Thanks for sticking around till the end of the video. See you in the next one.